GM. What's up, everybody? Welcome to the Daily Digital Download for Friday, June 5th. How are we doing today, folks? Are we surviving out there? Are we doing all right? Crypto Twitter land? Man, it's rough. Bitcoin has fallen to $59,817. Woo! We are in a bloody week. Let me just add the old post to the TL. Yeah, folks, we're in a bloody week. We're in a bloody year. We are full on into the bear market. There's no other way to put it. And this is something we've been talking about all year. So buckle up, enjoy the ride. It is what it is. Earlier today, here, let me just delete this. Earlier today, we hosted the Royal We hosted a space on what's happening with blockchain ecosystems in 2026, the layoffs, the restructuring, re-envisioning of how these ecosystems are going to be building out. And we talked about that on the space. It was rad. It was a good chat with myself. It was a soapbox rant. Much like these. I've been creating content since 2017, crypto content since 2017, and working in an ecosystem since January 2018. And sometimes it's rough to see 7 people tune in to a space and 0 people tune in to a live stream. But, one of the things that I've really valued about being a content creator and educator in the blockchain space since 2018 is I've never walked people down. I've never pumped and dumped, never walked people into buying an asset that I didn't believe in. I've never spoken favorably about an asset that I didn't believe in. And it's hard to see these KOLs come and go. And there are so many people out there that have been building in blockchain and crypto for many, many years that just aren't on people's radar. But time will tell. The bad will get snuffed out, and the good will keep on building. Today's news is we're not really going to touch on all the negatives. Well, we're going to acknowledge them. First things first, let's just do this. Crypto is experiencing its worst week since July 2024, which is hilarious because that was basically around the time when Trump doubled down on catering to the crypto and blockchain community. Was that summer. So, I guess we bottomed, and then it was up until basically October 10th last year. Bitcoin is down 15%. ETH is down 17%. Zcash crashed 30%. We're teetering on the brink of a major breakdown in price after suffering our worst week since July of 24. There were a lot of catalysts this week for just abysmal price action, and also more to layer on to negative CT sentiment. The S&P 500 and stock markets were hitting all-time highs earlier this week, and crypto just continued to go down. We've been down only basically since October 10th of 2025 when we saw these massive cascading liquidations. So this week, in addition to just being in a broader crypto bear market, there were other catalysts that happened. Strategy sold 32 Bitcoin out of its 830,000 Bitcoin stash, and everybody freaked the fuck out about that. Get real. There's also a ton of IPOs that are coming up right now for what's speculated to be for the 3 killer AI companies right now. Anthropic, Grok is part of a SpaceX IPO, and OpenAI. So we're possibly seeing aggressive capital, if you want to call it that, looking for alpha that's probably exiting beta stocks, beta assets, and positioning for those IPOs. And also just in general, there's a lack of spot crypto volume. There's just not a lot of volume. There's not a lot of depth. And when there's a lot of sales, they're felt really harshly. All of the exchanges so far this year are down on revenue, on fees, because nobody's trading. The only times we see trades happening in DeFi or in centralized exchanges during long drawdown periods such as this are during days when crypto crashes, because everybody wants to fly to safety. And so today, June 5th, the biggest winners of today's market are going to be token holders of exchanges that distribute portions of fees earned on the platform. Hyperliquid, Flamingo Finance, hundreds of others. So if you hold a DEX token that distributes fees from trading, this is for you, because today you win. All right. What else happened that has CT just completely heartbroken? Zcash vulnerability was found that allowed an unlimited counterfeit minting. The exploit was fixed. The news that everybody is selling Zcash on is that an exploit was fixed. Not that there's something to worry about with the exploit, but that it existed and that it's been fixed. That being said, I do not think that people are selling Zcash in droves because of this particular vulnerability. I think it's the reason for a lot of people to exit their position. If you look at what the darling coins were leading up to this week for the past 2 to 4 weeks, it was Zcash, it was Near, it was VVV. A lot of KOLs and people on CT were just pumping these tokens in your face, trying to get you to buy them. And as with everything, what goes up must come down. And the quicker it goes up, the faster it comes down. And Zcash was one of these darling projects that was shilled over the past month. There's nothing wrong with... Never mind. So what happened? The orchid, Jesus, sorry. The coffee's not strong enough today, and we've been working all morning, talking all morning. And the orchid transaction pool allowed an exploiter to create an unlimited amount of counterfeit transactions in this pool. Shielded Labs, an independent Zcash development entity, hired a security engineer, Taylor Hornby, to conduct a review of the protocol in April. The announcement of Hornby's findings are what has led to the steep decline in the price of Zcash. Hornby was a longtime contributor to the Zcash ecosystem, and he evaluated the current state of the protocol using both AI-assisted and traditional security research techniques to identify vulnerabilities before they could be exploited by malicious actors. Before. On May 29, Hornby discovered the Orchid Circuit vulnerability using Anthropic's newly released Opus 4.8 model. Congratulations. Opus 4.8 has just been hot garbage for me. So I'm glad that somebody was able to use it for something positive. And then Hornby shared his findings. Orchid Pool is Zcash's shielded transaction pool protocol, which allows users to send and receive ZEC, the Zcash token, with full zero-knowledge privacy. The Orchid circuit is a zero-knowledge proof system that ensures only valid transactions are accepted into the pool. The post explained that the vulnerability stemmed from an under-constrained element of the Orchid circuit, which made it possible to enter arbitrary false inputs to an elliptic curve multiplication and have it approved. So fake tokens could be approved to be a part of the shielded pool. The vulnerability was patched on June 1st, 4 days ago, days before this announcement came out. And it's been present since May of 2022. The big problem here is that, not the big problem. I mean, look, hey, crypto is innovative, cutting edge, and the default should be for anybody going into any sort of crypto project that you can lose your assets at any given point. Not even the most safe, secured network is safe. Bitcoin was largely viewed to be super safe and super secure, and it itself is at threat of post-quantum hacking and thefts. Nothing is guaranteed in this life. Anything that you put into crypto, you should be willing to lose and see go to zero. I'll get off my high horse now. The privacy properties of the Orchid pool and the nature of the vulnerability also make it difficult to know whether the pool had been exploited before discovering the flaw. The nature of zero knowledge proofs is that it is very difficult to actually prove that something happened. Something specific in this manner. The whole value prop of a ZK proof is for this mathematical equation to guarantee that an event took place without proving that the participants of that event, who they were and what they were doing. The ZK proof just proves that this individual conducted that thing that was a part of that event. And so that's why it's so hard to discover whether this flaw has been taken advantage of, because the very nature of ZK proofs make it difficult to verify specifics, such as specific transaction count or specific individuals. And so that's what the problem with the flaw is. Why we might not know if there were indeed malicious ZEC tokens that were minted. That being said, Shielded Labs said that they're not overly concerned that counterfeiting took place before the bug was fixed, as the vulnerability had gone under the radar for many, many years, even under the scrutiny of the world's best cryptographers. So don't worry. Your neckbeard first-time AI user isn't going to be able to find and hack this exploit. The exploit has been fixed, and Shielded Labs, the entity that found this exploit, isn't overtly concerned that there was negative activities taken and that Zcash was minted in an unlimited manner. This is just an unfortunate externality that happens with a token that was just absolutely mooning because it was a darling token for the past month, and then something bad happened during a bearish week, and now it's having an equally adverse reaction to the news, which was just as equally crazy to see the token rising for no reason at all for the past month or two. RIP to Zcash top buyers. Moving on, a bank is saying that the crypto bill in the Clarity Act only has a narrow window for passage this year. Look, I'm just reiterating the same thing I've been talking about for the past 3 weeks. The only difference now is JPMorgan is acknowledging it. But hey, JPMorgan, maybe don't put crappy wording about how we can't get yield on our stablecoins if we have our stablecoins on Coinbase or Kraken or Gemini or any other platform that's not your bank that does fractional reserve lending with whatever capital I put into your institution, and I only receive 0.05% APY when you're making 6% interest on any dollar that I deposit into your institution. Yeah, so I don't cry for the banks. That being said, the bill still has to get reconciled with the Senate Ag Committee. Then it needs to be put to the vote on Senate floor and receive 60 out of 100 votes. Then it needs to be reconciled with the House. And then there needs to be a presidential signature. Congress is going on break in August. And then when everybody comes back, they're either focusing on budgeting issues for the government more broadly, or they're campaigning. So really, if we think about it, we only have through July to get this bill done. And government moves at the speed of molasses. What are the odds that we're going to get the crypto bill to go through in July? Well, let's just take a quick little peek at Polymarket. Can we find really quickly? Oh my gosh. They're going to make this difficult, aren't they? Let's just look up Clarity Act real quick. There we go. We are currently sitting at 57% that Clarity Act will get signed into law in 2026. Not bad. Not bad at all, considering we were down at 44% in April and 39% in January. So I am not going to be holding my breath. Congratulations, JPMorgan, for telling us that water is wet. In other bank news, let's just get this crap out of the way. Major U.S. banks are purportedly building their own tokenized deposit network that could launch as early as the first half of 2027. The network is expected to be operated by the Clearinghouse, a private sector payments company owned by a consortium of major banks, including JPMorgan, Bank of America, Citigroup, Wells Fargo, and others. The platform is being dubbed as the bridge and the chain by some banks, would enable tokenized deposits to move instantly and support around-the-clock settlement. Look at them using our technology. The platform could support 24/7 liquidity movement, cross-border payments, and treasury management. The whole problem with this is that banks are going to own it. So they themselves are disintermediating third parties, increasing their overhead, removing third parties that perform services so that the banks can capture more fees. And now they're building the technology and the infrastructure themselves so that they can handle all the flows on these networks. This is not the promise that the cypherpunks gave us when they built blockchain networks. That being said, let's take a silver lining. At least the banks recognize the value of blockchain now and tokenization. So our technology won. Shrug. All right. Let's finish on a final piece of good news. How about that, huh? ether.fi is allocating $100 million to Plume RWA's vault. Plume is an on-chain vault manager, and ether.fi is an ether restaking, liquid restaking protocol that also has a fantastic payments application. Are going to be launching a new yield-bearing RWA vault. As part of the initiative, ether.fi has exclusively allocated $100 million to the vault, which comes from a mix of ether.fi's liquidity provider base, including funds, family offices, and high net worth individuals, as well as managed capital from existing liquid vaults, such as Liquid ETH, Liquid USD, and Liquid BTC yield products, which collectively hold around $300 million in TVL. The new vault will be available directly through ether.fi app, is aimed at giving ether.fi and its users access to yield from tokenized RWAs, a killer use case that is not going anywhere. Tokenized RWAs continue to be one of the fastest growing areas of crypto, obviously, and vaults are they were the key word on crypto Twitter 2 months ago, 3 months ago. They're one of the more popular ways to track and package these opportunities via RWAs. Rather than requiring users to manage multiple protocols and positions, a vault bundles strategies into a single product with easier deposits and withdrawals. So you, the end user, just put your stablecoin or your cryptocurrency into the vault. Then you hold a portion of that vault and you passively receive income. You passively receive interest as income. Plume said its RWA vaults are similar to structured income products and give users access to a yield from a basket of institutional assets, including over-collateralized credit pools, AAA-rated collateralized student loan obligations, just loan obligations. I'm a millennial. Whenever I see loan, I just throw student right in front of it. My bad. And total bond market exchange ETFs, sourced from asset managers that collectively oversee more than $10 trillion in assets. Congratulations to ether.fi. You guys are just absolutely crushing it in 2026. Really. ether.fi migrated from Scroll to Optimism. They brought millions of dollars of revenue with that move. They have a phenomenal app. They've done a great job at partnering with content creators to kind of share what's going on. ether.fi is usable around the world. Really just can't say enough great things about what they're doing. Congrats to the ether.fi team. You guys are really, really, really crushing it in 2026 when a lot of entities are going underwater, honestly. All right, folks. Well, I hope that if you're here right now and you're scared, that you realize you shouldn't be. We're just in a bear market, man. And during bear markets and during bull markets, there are weeks when assets correct and go down 20 to 40%. It happens, man. And we're just into the bear market. We are about to be 7 months into the bear market, which started on 10/10, in my humble opinion. And typically during these 4-year cycles, it's the first year of the cycle that's the roughest. So congratulations to all of you who are still here. We're about halfway through the initial storm of correcting in a post-bull market era. And honestly, man, the things that are happening this week are natural. There's always going to be exploits and bugs and fixes of your favorite protocols. There's always going to be tokens that were running up because KOLs were pumping them up. And then when one small negative thing happens, those tokens crash. It's just balancing out, man. It's just a correction. Honestly, if you're still here in 2026, turn off crypto Twitter, man. Maybe go put a little bit more money into the assets that you believe will be here in 5 to 10 years and turn off crypto Twitter. Honestly, go touch grass. Go watch your favorite TV show. Go listen to your favorite music. Go work on your passion project. Go start a new hobby. Friggin' anything other than doom scrolling Twitter to see what the KOLs had to say. And I guess, honestly, I'm kind of shooting myself in the foot because here I am on Twitter talking to all of you. But we do this every day through the ups and through the downs, just like we've been doing since I've been working full-time in this space since 2018. So, folks, if you haven't yet, please subscribe to our newsletter at thesmarteconomist.beehive.com and go have a safe, fun, healthy, happy weekend. This is just another bear market thing, and this is just another week, and everything negative that's happening right now, too, shall pass. All right, guys, we will catch you next week. Take care of yourself. Don't stress too much.